Good day, my dear students. I am Mr. Olawale Benishola, your commerce teacher, and I welcome you to another exciting lesson. Now, this video is brought to you by Igota Virtual Learning. Today we'll be exploring an essential topic in our WAEC commerce levels. We are looking at banking. Now, banking, as we all know, let me just quickly go through a little bit about banking before we dive in finally. Now, banking is the backbone of our modern economy, and understanding how it works is crucial, not just for this examination that you want to do, but for your daily life as well. Let's start with our lesson objectives. Now, by the end of this lesson, you'll be able to understand the following objective that are stated below. Number one, you'll be able to understand the meaning and importance of banking. Two, you'll be able to identify and explain different forms of banking services like ATM, money transfer, and e-payment. Three, you'll be able to distinguish between the three main types of bank accounts when we talk about current, savings, and fixed deposit accounts. And lastly, you'll be able to comprehend the meaning and basic principles of insurance in banking. Can we begin? So, what actually is banking? Now, there are various meanings of banking, but I'm going to help you to say as many meaning as possible for you to be able to understand what banking is all about. Now, banking refers to the business activities of accepting and safeguarding money owned by individuals and entity, and then lending out this money to generate a profit. Now, banks are financial institutions that act as an intermediary between a depositor, that is people who save money, and borrowers, people who need money. We can also say that banking refers to the business activity of accepting deposits from customers, safeguarding their money, and providing loans and other financial services. It plays a central role in the economy by facilitating the flow of money and credit. Now, a bank is also a financial institution which is licensed to receive deposits and make loans. Banks also offer other services like wealth management, currency exchange, and safe deposits. Now, in Nigeria, banks like First Bank, GT Bank, and UBA, or moreover Zenith Bank, provide these essential services, helping to keep our economy functioning smoothly. Now, think of a bank as the heart of the financial system, pumping money through economic body. Talking about forms of banking services, let's start with ATM, which is also known as automated teller machine. Now, ATM are electronic banking outlets that allow customers to complete basic transactions without the help of a branch representative or teller. Now, an ATM is an electronic machine that allows customers to perform basic banking functions without the need for a human being, which is also known as a bank teller, that works in the bank to assist a customer. That means the customer must have known how to operate the ATM machine before going there. Like, let me give an example now. For example, now, instead of waiting in long queues in the banking hall, a student can simply go to an ATM, insert his or her card, and enter their PIN. That is the 4-digit PIN, and withdraw their money for their daily needs without any further delay. Now, ATM operates 24 hours, 7 days. Now, making banking convenient even during weekends and holiday. Now, the main features of ATM includes you can able to withdraw your cash anytime. That is 24 hours, 7 days. Within 7 days services, you can check your account balance. You can get your mini statement of account. You can transfer funds between accounts. In some cases, you can pay bills or recharge cards, which are also called ATM or airtime as proposed. Let's talk about money transfer. Now, money transfer involves moving funds from one account to another, either within the same bank or between banks. Now, money transfer is the process of sending money from an individual or an organization or an entity to another, either locally or internationally. Now, for instance, a parent in Abuja can transfer school fees to their child's account in Port Harcourt without physically traveling there. Now, money transfers can be done via various means, that is through various means, through various channels, including bank branches, mobile banking apps, or USSD code like the star 737 hash for GTB users. Now, there are various forms of money transfer. We have intra-bank transfer, that is transfer between accounts in the same bank. We have interbank transfer, that is transfer between accounts in different banks. We have international money transfer, that is through platforms like Western Union or MoneyGram. Now, what are the features of money transfer? It is fast and reliable, can be done physically at the bank or digitally, requires sender and receiver's details, and so on and so forth. Next, we have what we call electronic payment, which is also known as e-payment or online transfer or electronic payment. Now, e-payment refers to the electronic transactions conducted over the internet. Now, this includes paying for goods and services online, transferring money through money apps, and using internet banking platforms. Now, e-payment refers to digital methods of paying for goods and services or transferring money electronically. Now, examples, we have online bank transfer like a bank app or website. We also have mobile banking or USSD codes. We have the PAS, point of sales payments. We have the internet banking and card payments. That is credit or debit. Now, for another example I can give you, real life example I can give you, we have a market woman in Onitsha can receive payments for our goods through platforms like PlayStack or Flutterware without handling physical cash. Similarly, you can also pay for your DSTV subscription or buy airtime using banking apps or your mobile phones. Let us talk about features of e-payment. We have convenience and time savings. We have requires internet or mobile network. We have reduces of use of physical cash, often secured with OTP, which is also one-time password or PIN. Talking about savings account. Now, a savings account is quite different from current account, which we spoke earlier on. Now, a savings account is designed to help customers save money and earn interest on their deposits. Wow. Now, this is ideal for individuals who want to save money and earn interest. Now, what are the main features of savings accounts? Now, under savings accounts, you pay that it pays interest on deposits, though it is typically low in Nigeria, around 1 to 4% per annum, which is per year. Now, it allows for only limited number of withdrawals per month. You can only withdraw for it at the number of times which you can withdraw from a savings account is limited, unlike the other accounts which you can withdraw unlimitedly. Savings accounts, there's a particular number of times that you can only withdraw from your account under savings. Now, it allows for lower minimum balance. You can't withdraw totally everything in your account. You must leave certain amount of balance in your savings account. Now, ATM card is provided for easy access to fund. Under savings account, ATM card is being provided for you to have accessibility to your funds, to your money. Now, it may require maintaining a minimum balance to earn profit. Yes, for you to get profit under savings account, you must leave a minimal amount of money in your bank account. Now, it's limited and there's no need for check writing privileges. That means it is limited and you don't have access to collect check just like current account. Now, what are the main features of savings account? You earn interest. You, as I've said earlier on, I just want to do a kind of a cross check. Encourage savings habits. That means having saving account encourage you to have a saving manner, a saving habit. For instance, let me give an example now. For instance, a young graduate named Amina, who is a girl who has just started her first job, will benefit from opening a savings account to gradually build our financial reserves while earning some interest. Now, you know what that means? That as Amina has opened her first bank account, starting her first job, she can gradually, little by little, build a financial backup while she's also earning some interest as the money grows in the account. As simple as that. That is good on savings account. Now, let us talk about types of bank accounts. Now, when we talk about types of bank accounts, we have current account. Let us talk about current account. Now, current account is a deposit account designed for daily transactions, and it is primarily used, that is mainly used by businesses and individuals, which is me and you, who need to make frequent withdrawals or deposits. Now, current accounts are mostly used by businesses, people, companies, and organizations. What are the main features of current accounts? Now, the current features of current accounts includes no interest is typically paid on current accounts in Nigeria. Now, account holders receive checkbooks for making withdrawals. It allows unlimited withdrawals and unlimited deposits. Usually requires a higher minimum balance than saving accounts. Comes with monthly maintenance fee, and lastly, offers overdraft facilities in some cases. Another features which I can think of is that it allows banks charges service regularly, which is also part of maintenance fee. Now, let us talk, for example, let me give a real life example of current account. Now, for example, Mr. Okoko is a man who owns a shop in Kano Market, would benefit from a current account as he needs to make multiple transactions daily with suppliers and customers. Let's talk about fixed deposit account. Fixed deposit account. Now, fixed deposit account is a term deposit where money is placed for a fixed period of time at a fixed rate of interest. Now, this are designed for individuals or company who want to invest their money for a fixed period at a fixed interest rate. Now, the main features of a fixed deposit account, that is, it has higher interest rate compared to savings accounts. Money is kept for a duration either 30 days, 60, 90, or 180 days. Wow. You cannot withdraw funds before maturity. That means you cannot withdraw your money before the expiration date of the fixed period, which will incur penalty. That means that if you withdraw your money before the time is expired, instead of you to have the actual interest or whatever the gain that you want to gain, you'll be paying penalty, that is paying fine for withdrawing your money before it expires based on the time period of the fixed account policy. Now, it is also suitable for medium to long-term investment. Interest is paid at the end of the tenure. Now, it offers higher interest rates than savings account, which is 5 to 50%. I've explained that one earlier on, but I just want to go further. Now, in Nigeria, it depends on the amount and the duration. Now, money is locked in for a specific period of time, 1 month to 5 years. Penalty for early withdrawal. Now, no regular transactions allowed. Now, interest rates depend on amount deposited and on duration. Now, let me give an example now. For example, Mrs. Adekunle, who received a retirement benefit, as a retiree, she could place a portion of the money in a fixed deposit account for 1 year to earn a larger, higher interest while she decides on long-term investment. It's just as simple as that. Now, Miss Adekunle have put in some amount, some percentage of her money in a fixed deposit account, while for 1 year she'll be expected to get a particular interest rate, higher percentage more than she putting her retirement benefit in a savings account. Now, let's talk about insurance principles in banking. But before that, what actually is insurance. Now, insurance is a risk management which looks like a form of arrangement, a management and arrangement where an individual or an entity receives financial protection against losses from an insurance company. Now, the company pools clients' risk to make payments more affordable for the insured. Now that you know the meaning of insurance, now what are the basic principles of insurance that we want to look at? Let's start with utmost good faith, which is also known as Imberma Fidelis. Now, these principles requires both the insurer and the insured to deal with each other with absolute honesty and full disclosure of all material facts. Now, the insured must not hide any information that could affect the insurer's decisions to accept the risk or determine the premium. Now, basic principles under utmost good faith, all material facts include age, health condition, previous claims, existing policy must be fully disclosed. Now, utmost good faith, for example, if a maker wants to insure a shop in Alaba market, he must disclose that he stores flammable materials such as this affect the risk assessment. Failing to disclose such information could make the insurance contract to be null and void. Other basic principles under utmost good faith also applies especially in life, health, and marine insurance. Now, let me give another example now. A person applying for health insurance must disclose any pre-existing medical conditions like diabetes or hypertension. The next type of basic principles of insurance in banking, we are looking at insurable interest. Now, what do we mean by insurable interest? Now, this principle states that the person taking out insurance must have a financial relationship with the subject of insurance. That is, the insured must stand to suffer a financial loss if the insured event actually occur. Now, the insured must have a financial or peculiar kind of interest in the subject matter of insurance. That this also means that they will suffer a loss of insurance principles if it eventually occur. Now, the basic principles under this one, that it must exist at the time of taking the policy and at the time of a loss, especially in property insurance. It ensures that insurance is not used for gambling or speculation. Now, a typical example is when a person can insure their own house or car, but not their neighbor's own, because they do not have insurable interest in the neighbor's property. It is not the person's property, it is for their neighbors. Talking about indemnity. Now, indemnity, these principles ensure that an insured person does not profit from a loss but is restored to the same financial position they were in before the loss occurred. Now, for example, if Mrs. Adebayo's shop worth 500,000 naira is destroyed by fire, the insurance will only pay her 500,000 naira, not more, not less. She cannot profit from her loss. Now, the basic principles with indemnity is that insurance is not meant for profit, only to cover actual loss. It helps to prevent moral hazard, that is intentional damage to claim money. We have some people that will intentionally spoil their property just to claim insurance money. Now, we also have, it's applicable mainly in property and general insurance, not life insurance. Now, we have some people that will intentionally commit a crime or kill someone just because they want to claim a life insurance of someone else. Now, another example, if an insured phone is damaged and it's worth 100,000 naira, the insurance company will only compensate you with that value. No more, no less. Let's head to subrogation. Now, subrogation, this principle gives the insurer the right to pursue recovery from a third party who caused the insurance loss after the insurance has compensated the insured. For instance, if Mr. Chukwu's car is damaged in an accident caused by another driver, his insurance company pays for repairs. The insurance company can then claim that money from the driver who caused the accident. Now, the basic principles attached to this is that it prevents the insured from receiving double compensation. That means that Mr. Chukwu's victim will not receive double compensation from the insurance from the person's insurance company. That means will not receive double the money that's meant to be paid. Now, number two, this kind of insurance is common in motor accident cases or where a third party is responsible. Now, another example, let me give it to you, is that if your car is damaged in an accident caused by another driver, your insurer pays you, then the insurer can sue the other driver to recover the amount. It is time for us to practice with some WAEC past questions on banking and some part of insurance, which we have discussed in today's topic. Now, these questions will help you to understand the examination pattern and improve your problem-solving skills. I encourage you to pause, take a time after each question, and attempt it yourself before you resume to check your answer. Now, question number one. Question number one. Which of the following is not a function of commercial banks? Option A, we have acceptance of deposit. Option B, we have formulation of monetary policies. Option C, we have provision of loans and advances. And option D, foreign exchange services. What's our answer? Our answer is option B, that is formulation of monetary policy. Now, let me explain. Commercial banks accept deposits, provide loans, and offer foreign exchange services. However, formulation of monetary policy is the function of the Central Bank of Nigeria and not commercial banks. The CBN controls money supply and interest rates to achieve economic objectives. Question number two. A type of bank account that allows the account holder to withdraw money at any time is called A, current account, B, fixed deposit account, C, savings account, and D, term deposit account. What's our correct answer? The correct answer for question number two from the year 2018 is current account. Let me explain, which is option A. Now, current accounts are designed specifically for frequent transactions with no withdrawal limits. While savings accounts also allow withdrawals, they often have limits on the number of withdrawals per month. Now, fixed deposit accounts and term accounts locked funds for specific period. Question number three, which is coming from the year 2019. Let's begin. The principle of insurance, which states that the insured must have financial interest in the subject matter of insurance, is called dash. A, indemnity. B, insurable interest. C, subrogation. And D, utmost good faith. What's our answer? Our correct answer is option B, which is insurable interest. Let me explain. Now, insurable interest means you must have a financial relationship with what you are insuring. For example, you can insure your own car because you could suffer financial loss if it was damaged. But you cannot insure your neighbor's car because you didn't or you wouldn't suffer direct financial loss. Wow. Today we have explored the fundamentals concept of banking and a little bit of insurance. We have also learned about the meaning of banking as a financial intermediary system, the different forms of banking services including ATMs, money transfer, and e-payment. We have also looked at the three main types of bank accounts, talking about current, savings, and fixed deposit accounts, each with its unique feature suit for different needs and different type of customers and customers' needs. Now, we have also looked at the basic principles of insurance in banking, including utmost good faith, insurable interest, indemnity, and subrogation. Now, I want you to understand that banking is an essential part of our everyday life. When you start any income, you need to choose the right type of account if you run a business. You also need to understand e-payment system, and if you want to protect your assets, you will also need to understand the insurance principle, which becomes crucial. Now, I want to encourage you that you should practice this concept regularly. Visit a local bank if possible to observe these operations firsthand. And remember, banking knowledge is practical knowledge that will serve you throughout your life. Thank you for your attention during this lesson. If you have any questions or you need any further clarifications or any of the topic on banking or any of the